Yeah, I'm losing my edge.
Today we are talking about particularly hedging indices with stocks. And we touched on this on Friday of last week,
Right.
a segment or two ago, just the idea in general being okay. And today's actually a pretty good example of this because I should have updated these numbers from last week. Tesla up another 8% just today alone. And Tesla is a stock that's in the small stock 75 index. And you'd be saying to yourself, okay, well, if Tesla's up 38% in the last month, it's up 8 to 10% as we speak, this small stocks index should be ripping higher. And it is higher on the day, but you balance that with stocks like American Airlines, Lyft, United Airlines down there that have not been doing so solid over the last month. And you see how the stock index itself is really just like the title for this living organism that it houses. You know, it's got all these companies that are constantly pushing and pulling on each other, and they're arriving at what the stock index is doing on a daily or monthly basis. Anything?
No, I agree with you completely. It's what was interesting is we went through this exercise on Friday and you put together this. This kind of goes back to what we were saying. Those all looked like a rich dichotomy. Every one of these, I would say 70% of what we're looking at today is even more extreme than what we looked at on Friday.
Yeah, no, absolutely true. Today is much more extreme than it was even, not even 24 hours of trading ago. And it's interesting. The small stock 75, as we'll see, because we're going to look at kind of hedging out some of these single stocks, or you can think of it as just like a pairs trade between some of these components that are outperforming or underperforming and your position in the index itself. And it's not as straightforward for indices like NASDAQ or S&Ps that are market cap weighted indices. So those weightings are changing constantly. The weightings in small stock 75 are changing as well, but they're usually, when the index was created, all of the weightings were equated across the individual stocks. And of course, they fluctuate depending on performance, but not fluctuating nearly to the extent of the market cap weighted indices that now have, 12% in Apple, 12% in Microsoft, and then growing percentages in stuff like Amazon that's up 20% in the last month, and now is becoming a big weighting of that NASDAQ. And so with those things shifting and those indices a lot of times essentially being exposed to really only like 4 or 5 stocks, it's not as interesting in my mind to trade those stocks against it, because you might as well just trade Apple or Microsoft alone at that point. And so it's interesting to look at this here within the small stock 75.
Yeah, absolutely. And I think you make a great point about trying to pick and choose here is a challenge, and pulling out one of these is that same conundrum. This is really, we're kind of living through a very unique piece of time, but let's make it a tradable opportunity. And I think that's what we're going to look at a little bit.
Yeah, because you can see here in that yellow line, that is where the index itself has traded, and it, with the move in Tesla, it looks like it hasn't moved anywhere. But that stock index in the small stock 75, Pete, was down 40% at 1 year, came all the way back to positive for a brief second there on the year, and is now trading around, I think, down a couple percentage points year to date. Tesla, like we just saw, up over 30% in the last month, up almost 10% today, and on the year up over 250%, compared to American Airlines, that's on the year, Pete, down over 50%. This is, it's similar to me when you're looking at different currencies within that sector, or different, different components of an asset class. Here, just looking at the components of this stock index and against the index itself, and these are the two big outperformers and underperformers that you can kind of keep in your mind for a little bit.
Yeah, it really is an interesting dichotomy. I think because of the parabolic nature of what Tesla's doing, it mutes the others. But in realistic terms, if you took that off, you would see that these are both very interesting tradable opportunities. But this is, I don't know what you make of Tesla like this, because I think we've seen this play out so many times, and it always goes further and longer and faster than we think, and then it becomes its own challenging environment. So
yeah. So yeah, the first piece in this process here, and yeah, you can really, I know, Pete, you like to think of it in this way because we're building new products constantly, and you're always trying to say, okay, well, if I have this stock index and I've got its individual sectors, or, we're going kind of to the even finer point of the individual constituents themselves, you always think of it as like, man, it'd be cool to be able to hedge out some of that risk,
Right.
like say, and the first part of this process, whether it's hedging out or pairs trading, however you want to think of it, the first thing is, okay, where do I think the stock market is going, relative to price action or relative to my portfolio, and or just what I'm thinking in general.
Right.
Do I want to get long or short the stock index itself? And then you could kind of say like, okay, well, I want to be long, but I really don't want to be long this Tesla that's up 300% year to date. And so it's a matter of getting long that index and then getting short a piece of that Tesla that gets that out of that. And same here with American Airlines. It's like saying, okay, I want to get short the stock market here, but I really think this American Airlines probably will bounce off of these lows down more than 50%. That's too much. So I'm going to get long a little piece of American Airlines and hedge out that exposure, or just kind of make that, like we're saying, like a pairs trade almost, however you want to think about it.
And you're right. You can either call it, it's normalizing, neutralizing part of the basket, or just simply a pairs trade. I think it keeps it simply as a pairs trade. But, what's interesting there is with the pairs trade, and in this instance, I think it highlights it even more clearly than oftentimes it does, is any part of that Tesla up move from after 150% seemed rich. A pairs trade would let you weather that probably poor location much better than an hour end.
No, that's a great, I didn't think of it from the other end. In my head, it's like, okay, make your decision on small stock 75 and then go forward with something in any of these kind of names that are at extremes. But I do like this idea as well, Pete, which is if I got short, I sold a call spread, or I bought a put spread, or I sold a share or two of Tesla into this move, and then I bought that small stock 75 against it. And of course I'm over, it's got a little bit of long Tesla in that small stock 75 position, but I'm overweight short Tesla. The nice thing about it is that long in the small stocks would have helped you, like you said, weather a little bit of that storm. So yeah, I was just thinking about it from hedging or pairs trading standpoint, but also you don't have to necessarily think about it stock market and then individual stock. It could be, I want to battle one of these individual stocks, and then I want to hedge some or all of that exposure with this small stock 75 that has a piece of it that has a high correlation to it. And so, the most straightforward way to do this, Pete, would be to look at the notional of each of these pieces and then say to yourself, okay, well, since all of these stocks and all 75 stocks in SM75 have around approximately equal weightings, you could say, all right, well, small stock 75 at what is it right now, like 47 or
47.22.
Yeah, so at around 47, you'd say, okay, the notional of that smalls is just 47 times 100, and so it's $4,700 divided by 75 of those constituents gets you to about $63 of exposure in each of them. Now that's approximate. It's not exact. These weightings move on a second by second basis. I'm sorry, I can't be completely exact there. But then you just look at, all right, well, I could get rid of 60 to hedge out that Tesla exposure, or hedge out that United Airlines from whatever direction you're looking at. You really need to get rid of $63 worth of exposure per one contract in the small stock 75. You could try to do that with the long and short shares themselves. You run into some capital inefficiencies that way. You also run into the fact that Tesla is, $1,700 right now. So unless you can do fractional shares, you're going to have a hard time getting $63 of exposure. But you still have that inefficiency as well. And so that's why we like to usually get the efficiency where we can, which is long or short the futures. Like we said, figuring out which direction you want to take on this hedging position or pairs position. And then I like usually using options. If you could use naked options, you're going to get a lot more efficiency on getting long or short that other piece. The only problem is, Pete, this is going to be much less exact. Not necessarily super expensive. You could use those naked calls and puts if it's a stock that is trading.
You're right. If
some
you're
stocks
going out
trade
to that, right.
$20, $30, $40. Unfortunately, a lot of stocks like Teslas and Apple and everything and Amazon are very expensive. So this is still even hard to do. But these are kind of all the tools at your disposal. You've got some formula stuff here to look at potentially trading long or short shares or fractional shares against a long or short contract in SM75. And then also you can kind of think of it as, I want to be long the stock market, but then I also want this Tesla exposure out of there. I want to trade short Tesla against it. Selling a very small call spread against it is a nice way to think of. Anyone who knows about covered calls or covered puts, that's to me the easiest way to go about this. If the stock is small enough to be able to do that naked, that's where you get the true efficiency in there. But you could at least get Tesla down to a smaller price, and you could get the probability of profit north of 50% by looking at those short call spreads, short put spreads, or hopefully naked positions in smaller stocks in general.
Yeah, this is a great piece. And you know what? By using the put spreads, the call spreads, or even as you mentioned, the way out of the money is where you can, stock always becomes a challenge for a number of different reasons. One is trying to find the right size to a smaller futures contract. You're right. Fractionalized shares help solve that. If you want to use stock, the options piece is probably a easier place to implement that. And why? We walked through an exercise of what's rich and what's cheap, and depending on the time frame, we're at weird levels right now in terms of the extremes. Why not take out certain pieces and see? In my mind, Frankie, that's trading both sides of the market. Now, granted, that's what you do with a pairs trade. You're using one against the other. But I like that much better than trying to figure out that this is, it can't go any further than this. Now, where it ends up, September 1 is a very different story than where it is right now. But don't feel you're bound by some perverse percentage.
Well, exactly. And don't feel like you're bound also by exact $63 here. A lot of times knowing that the smalls contract, knowing that you have this math in your back pocket to attribute at any given point, knowing that the small stock 75 is $4,700 in notional exposure, and then saying to myself, okay, I just want to make sure maybe I'll hedge out like 20% of that with a Tesla short call spread, which would be, something that's around $1,000 or $500 notional trade in Tesla options, being that 20% of the small stock 75 notional. So it's and I'm doing this math on the fly, and it might be a little bit confusing, but just at the end of the day, kind of, look at what you want to do. Do you want to be long the stock market, short these other stocks, short the stock market, long some of these other stocks, and then kind of fit the hedging or pairs trade. However, you've got tools to do it, like we're seeing here with shares and also with options. It just is up to the individual trader's opinion and up to the way that they like to strategically set up trades.
Well, Frank, and I like the point. You don't, if you have the formula, you'll end up with the math, which is $63. Don't be bound by trying to tweak around that. The whole point of these trades are to give you flexibility around location, around weighting, and it's a starting point. So don't feel like you've got to pull out a protractor or what was the thing called? Oh, a slide rule and figure this out. Did you ever use the slide rule?
I don't know. What could you possibly figure out with that? Is that like how you measure stuff? What is the slide rule?
It was like a
thing. I know what a protractor is.
Yeah, but a slide rule was like a ruler that had things. It had a bar that slid within it, and it did like math and conversions. I never used it. I don't know what it was, but
That's crazy.
I would
Yeah,
have thought
you do
in
not.
Michigan, well, I guess you guys just use rocks and count up to 10 and then move over to your toes.
That's exactly how math was invented. How it was intended was just, you know,
You do caveman math. I like it.
hey, the people who invented ideas like square roots or, you know, squaring something in general literally was, if I've got 4 rocks, they make a square, and that is divisible by half, and that's gets you down to 2. And so, I mean, the rocks thing, I'm not even going to be offended by that comment. But yeah, you don't need.
It's meant to offend you.
You don't need rocks or formulas or any of that. It's nice stuff to have. It gets you around to that ballpark, just so you're not over hedging or under hedging what you thought you had. But yeah, at the end of the day, this isn't rocket science here. It's not life and death between $63, $65, or even, in my opinion, like getting up to $100 or a couple of $100 off in the exposure. But yeah,
but
laid out the idea.
Right.
Now laying out a little, getting people closer to taking that idea to their own opinion in the market. We'll continue to talk about hedging. It's the same thing as hedging the precious metals index with gold. You know, I want to be long this precious metals thing. I want to sell some gold against it. Very similar idea that's translatable across every asset class and every product at the small exchange. So just getting you a little bit closer here today in hedging indices with their components.